Denver office buildings sell for 90% less than their estimated value 6 years ago. I guess that whole sanctuary city thing didn't work out, huh? Let's get into the real reason. Here we go. Article goes on to say, the sale is an example of a struggling office real estate market that hasn't rebounded since the pandemic. 90% off. That sounds a lot like San Francisco. That sounds like some of the buildings in Portland. That sounds like Seattle. What's the common thread here? Liberal running Dem-led cities? No, actually, these are all tech cities. These are tech cities. All of their folks have left the downtowns, and admittedly, the downtown cores have some slight issues with what we like to refer to as street safety. All right, let's get into it. Let's watch a video. This is crazy. You got to watch this video.
$3 million is a lot of money, but it feels cheap for a whole skyscraper.
Yeah.
Our Mark Salinger looks at Denver's now deeply discounted downtown.
Deeply discounted Denver.
We closed April 1st.
2 skyscrapers on 17th Street have a new owner.
About
Holy
$3 million for both buildings.
𝗧𝗓𝗪𝗧𝗔𝗬 just bought them for more than 90% off.
Holy cow.
Just 6 years ago.
These buildings were probably worth close to $200 million in 2019.
And that is where Denver's commercial real estate market stands right now when it comes to office space.
Oh, I've seen empty buildings. I've walked through empty buildings.
When the pandemic pushed people home, Denver's offices were left empty. 𝗧𝗓𝗪 is now planning to redevelop this space into more than 700 apartments.
In the end, I think Denver...
700 units. $3 million divided by 700 units. That's the acquisition cost for, we'll call it, vertical land value. That is nuts in a downtown core. Is there a market for 700 units, residential units in downtown Denver? I've been talking about downtown San Francisco being an absolute bargain, and that market's starting to see sales like this as well. We're starting to see the absorption come back for absolute bargains like this. What's the land value of this alone? I mean, it's got to be more than $3 million. Right? It's got to be. And you've got an actual structure. That is how bad the numbers have gone in tech cities. That's what this is. And tech cities tend to be liberal-run cities. And so you've got this additional layer of nobody really wants to be in the downtown. But real estate investors with big, huge balls and a lot of money or access to money are going to make a killing doing this. I'm not sure about this guy. I don't know who this guy is. I'm just, podcaster.
will benefit from more people living downtown than working downtown.
Office building occupancy, rents, and operating decreased. Interest rates have increased. And skyscrapers like this have been stuck in the middle since the pandemic.
Everybody went home.
We asked 𝗪𝗚𝗓 at MSU Denver.
The change that has happened, it's unprecedented.
And 𝗪𝗥𝗧𝗏 at DU to explain how massive towers like these could sell for the price of a nice home.
But I would say office buildings have declined in value 40 to 50% from where they were in, say, 2019.
There are a lot of buildings in downtown that are struggling to get the tenants back.
We still have the structural problem of people not wanting to work in office buildings in central business districts.
Tenants don't want to pay that high rent, and landlords have to adjust their expectations to more realistic level.
What's it going to take, though? I mean, how low does rent need to go to make this happen? That's the real question. And the bottom line is people that have gotten used to the last 4 or 5 years of working from home, they don't want to go into the office. People in Seattle are pissed. Amazon's pissed. They don't want to go into the office. They also don't want to lose their job. So it's one of those situations where the downtown core is designed to have a ton of employees, not people necessarily living there, but employees. So how is this going to make the balance go? I don't know. It's sure fun to watch and follow, though.
Of downtown offices looks different these days.
You're never going to get back to, in my opinion, the occupancy that existed before COVID.
It's a future that also gives new opportunities for Denver's tallest buildings.
The uncertainty and distress is forcing sales on terms that are unprecedented. But I think once we get through this moment, we'll find footing at a higher level again.
So we talked about those two buildings
Okay.
for $3 million compared to what they did or what they were worth, about $200 million just 6 years ago. But you have to remember that converting an office building to residential apartments isn't easy. It'll take tens of millions of dollars, if not more, to do that. It's a long-term investment, but one that developers like Asher there hope will pay off.
So downtown vacancies are a Denver problem, but are they a Denver problem?
Yeah, we're seeing this across the country. So Denver's occupancy rate around 25 to 30% that are empty. You look at places like Seattle, Austin, San Francisco. They actually have higher
Vacancy rates.
Exactly, than Denver, for example. But those all have one thing in common, and that they have a lot of tech companies that are there.
Sure.
They send a lot of people to work from home, haven't come back to the office, then they have high vacancy rates.
Yeah. It no doubt is a problem in Denver, right? Because you've got a downtown core that's dependent on folks being there. Mark
Exactly.
Salinger, thank you.
We've got some of the biggest developers in Seattle losing properties left and right because they can't keep them full. They don't have enough tenants. They can't refinance because interest rates are so much higher than they were in 2019. And that's what we're talking about here, 2019. That was kind of the peak because we didn't have COVID yet. We didn't have the hollowed out downtown cores. We didn't have the, hey, CDC says to let homeless people live wherever the F they want. We didn't have that. And we didn't have this, you know what, I think we'll all just go work from home. And it'll be Shangri-La forever. Oh, wait, it won't because, our tax basis comes from our downtown real estate cores. Oh, that is falling. So let's get everybody back to the downtown core. That whole huge tug of war seesaw thing that has happened with the commercial market. Denver, another tech market. Another market like Austin, Seattle, Portland, San Fran, you're seeing some incredible deals. But these are guys who are out there risking it, right? 2 downtown Denver skyscrapers recently sold for $3.2 million. If you live in one of those cities and you have an average home, say here in Seattle, average home, I mean, 1, 2, 1, 3, 1, 5 is not uncommon for just your basic starter family home, not a 3-2 Rambler single level, but maybe a split entry or a 2-story, some with a 2-car garage, maybe more than 2 bathrooms. It's going to run you $1.5 million. Double that, and you've got 2 skyscrapers for $3.2 million. Those numbers are incredible. Incredible. Now, guys developing these in 700 units, what's he going to pay retro cost per unit? Big question, right? Without knowing that market, which I don't. I'm a residential guy. He's going to spend some money. This is his entry into that marketplace. More than 90% below their estimated 2019 value of approximately $200 million. And that is why, real estate, it just, in the commercial sector, just kept going up. If you've got a loan for $150 million and your properties are worth, say, triple what this guy got these properties for, say $10 million, you got an appraisal at $10 million and you've got a loan on your property at 150, you are so far upside down, you're going to do deed in lieu of foreclosure or something like that. And that's exactly what we're seeing. And that's what we talk about a lot here on News for Reasonable People is like deed in lieu of foreclosure at the Westfield Center Mall in San Francisco, highlighting the dramatic decline in commercial real estate values following the COVID-19 pandemic. Nobody cares about commercial guys. They just don't, because it's not sexy like a home. Let's do a walkthrough of this commercial building that's vacant and ready for a tenant improvement situation. Nobody does those, right? Because it's based on income streams. It's based on pure numbers. Space, how much can you rent it for? Projected income, here's your value. Here's other comps. Similar projected values, not projected values, similar comps with income streams that have sold. That's your comp. There's your ratio to figure that out. So developer Asher Luzzatto purchased the building at 621 and 633 17th Street on April 1st, April Fool's Day, and plans to convert them into more than 700 apartment units. I mean, guy's either a genius and a visionary, or he's got a big project on his hands that may take him some times. And he's saying there were $200 million in 2019. Okay, say they were worth $100 million, and you get them for 97% off. I mean, Those are some crazy, crazy numbers. The drastic evaluation reflects a fundamental shift in Denver's office real estate landscape as remote work continues to reshape office space needs more than the 5 years after the pandemic began. And what we're seeing in San Francisco is AI, seeing some of that in Austin too. But you're seeing big companies. Here in Seattle, we've got Amazon, we've got Microsoft laying off 3% of their workforce, right? Don't need all that space. You've got consolidation, and everybody has been looking at office space. So this is continually being sorted out. But in Denver in particular, because it's a little bit of a smaller, big market, if you know what I'm saying, everybody went home. Things began to return to normal unless you were the owner of an office building. Yeah. I mean, if you're the owner of an office building, good luck with that. I have heard of some incredible leases happening in downtown Bellevue, where subleases, people are getting triple the amount of space for half the cost. You know, just numbers like that. And it's because developers are having a hard time what they would normally refinance out of. They don't have the value, and the numbers don't make sense with where interest rates are now relative to when they might have purchased. And say if they purchased in 2019 at that absolute peak, they are hosed. They're looking to bail. Experts estimate that office buildings in downtown Denver have lost 40 to 50% of their pre-pandemic value. So what happened with these two buildings? Yeah, you don't know, right? You just have no idea. City's Central Business District currently faces vacancy rates of 25 to 30%, and that is actually low relative to what I'm reading on San Francisco and Portland. Those are both considerably higher than that. But this remains lower than tech-heavy cities like Austin, San Fran, and Seattle. So, you know, the premise to this story is, Democrats are taking it in the butt. Their values are dropping. Liberal big cities, Austin, San Fran, Seattle, Denver. No, it's just that these are heavy tech markets. The downtown cores are heavy tech markets. Seattle, Bellevue here, incredible tech markets. I mean, that's why people come here, because you've got the labor pool. You want to start a startup here? You got startup funds, you got people, you got, buildings, you got complexes. And when people quit, people move, make lateral adjustments, always hire somebody else because they're already living here. All of the tech pool is here. They're in these kinds of markets, whether it's Denver, Austin, wherever that might be. I think Denver is experiencing a really high level of distress in office. A lot of markets are. Big boys are giving up big buildings. I've seen empty buildings. Yep, we talked about that. Dramatic price reduction reflects multiple market pressures affecting commercial real estate nationwide. At some point in time, there will be a turn where that absorption rate becomes greater, and they'll figure it out, whether it's conversion to residential. I don't think, in my opinion, that's not the way to go. But I'm just kind of against that anyway. I'm more like, all right, your downtown is office buildings, get some condos, but condos are just built differently. You know what I mean? You don't have the same amenities as you do in an office space, because one's meant to, you go there, work, you go home. Whereas a condo, you're at home. And then you got some cool retail on the main floor. And skyscrapers like those in Denver have been stuck in the middle since the pandemic. Remember, New York City absolutely emptied out. And we've heard some stories about this kind of stuff going on in New York City too. Some of those fringe areas on the perimeter. I think there will always be a market in New York City for these big, skyscrapers, because that's what New York City is. And Denver, not as much, but it's been an emerging, upcoming market. Street conditions, a little bit tough, right? Just a little bit tough. You had that whole Aurora, Colorado thing where all the criminal illegals from Denver were going there for housing, and then they took over those buildings, all that good stuff. We've had a tug of war between the return to office proponents and the work from home proponents. We still have the structural problem of people not wanting to work in office buildings in central business districts. And I think leadership of big cities has basically said, guys, we've given you tax breaks on all kinds of stuff to get you to come and run your businesses here. We need you to do us a solid. We'll do whatever it takes, but we need you to do us a solid and bring everybody back into the downtown core because all the tax revenue is based on a healthy downtown core. So much money comes from these big, big buildings. So here's another portion of that. Excise tax on 200 million versus excise tax on 3.2 million. You don't have, you can even be a, real estate podcaster guy and figure out those numbers. It's not that hard. So you're going to have some real cash flow issues for these cities when they realize, we're not getting nearly the same revenue we were in 2019 or whenever before, right? We're not getting anything remotely close to that. Nothing even close to that. $3 million for 2 high rises? I'll take a dozen. I'll figure out how to make that work. Right? Isn't that what everybody says? And then they don't do it because they don't have the balls to do it. 𝗪𝗥𝗘𝗠𝗦𝗧𝗔𝗬, director of Burns School of Real Estate and Construction Management at the University of Denver's Daniels College of Business. Can't imagine putting that on your nameplate, right? Or on your business card. Where do you work? Never mind. My name's Bob. He described the changes to the office real estate market as unprecedented. When you see 200 million down to 3.2, I'm going to go with that. I mean, that's not a bad looking couple of buildings. Those are not terrible buildings. If those are the ones we're talking about. And as I seem to remember, tenants don't want to pay that high rent and landlords need to adjust their expectations. They can't necessarily expect, some of these folks that you're dealing with right now, they can't adjust their expectations and make a go of it. That's just not reality. They don't have the income to cover their payments, and that's why they're losing these buildings or getting rid of them in an absolute fire sale like this one. They have to adjust their expectations to more realistic levels, so the values have gone down. Well, no, the values have gone down because the income streams aren't there reflecting their values going down. There are a lot of buildings in downtown that are struggling to get their tenants back. They're never going to get those same tenants back. It's going to be a new wave of tenants because those tenants are gone. They worked from home, and then their bosses told them to come back, and they said, F you, some version of that, and they're working at a different company. That whole tech industry is based on job churn. Yeah, the way you get a raise is you tell your boss, yeah, I'm going elsewhere. Oh, you're going to give me that? Well, then this guy's going to give me that. Can you match that? And they just do that all over town and make it happen. Converting office buildings to residential use represents one potential solution, though experts caution that such transformations require significant additional investment. So you got now 700 people in these 2 complexes, all taking a shower, all using restroom facilities. You've got significantly more residential stuff going on. How much retrofit do you have to make that happen? A bunch. Is the infrastructure of the city able to take conversion after conversion after conversion? Does it have that ability? Those are things that always go through my mind when you convert from office to residential. It is feasible, but not for all buildings, 𝗧𝗏 noted. It depends on the design of the buildings. It also depends on when they were built. So, a lot of it depends kind of conversations, right? Despite the tens of millions of dollars needed for conversion, 𝗧𝗏 sees opportunity in the market disruption. In the end, I think Denver will benefit from more people living downtown than working downtown. Maybe he's right. But my initial thought is, no, that's not really how we designed our downtown cores. And to do a reversal of that, I know we got a lot of big high-rise condos. I struggle with that one. Because in real estate terms, you're bastardizing what was an original use. You were bastardizing it. Well, I'm going to make it into a 4-plex, even though now it's a duplex. I'm just going to cut it in half. We're all going to live happily ever after. As an appraiser, when you hear that, you're like, all right, you bastardized your thing and now it sucks. And now you've got this weird functional floor plan that has inherent depreciation, and that's called functional obsolescence. And that's why they're talking about when it was built, design of the buildings, because some you can work around your functional obsolescence, meaning a floor plan issue. Others you can't. You might have HVAC systems that, you're going to have to retrofit all that. You have to do a bunch of work. The number of outlets you have for residential versus wall structure, you have to completely redo the whole thing, right? 𝗧𝗏 remains optimistic about downtown Denver's long-term prospects despite current market conditions. Yeah, but he's making a play. I mean, that's a ballsy move, no matter what. Give him credit. The uncertainty and distress is forcing sales on terms that are unprecedented, he said. But I think once we get through this moment, we'll find footing on a higher level again. And it always takes a guy like that where he's like, I think this will work. Why wouldn't this work? I can't really see the downside. Just goes in and doesn't overanalyze it and think, the downtown core is never coming back. That's what so many folks are going to say. Denver's toast, Seattle's toast, and I don't disagree. The numbers say otherwise. When you are selling 2 high rises for $3.2 million, I mean, that's just absolutely nutty, isn't it? It's crazy. It's crazy talk. But that is the reality. And it's because, like the article said, you've got, a whole bunch of outside pressures that are happening that are creating a situation where some seller, what lenders had to be worked through to get something like this down? Did somebody pay cash for this originally and they're just giving it away for 3.2? Love to see the history of transfer, the history of debt structure on these buildings, because that would tell you a lot. Like, how did this happen? Was it really worth $200 million? I'm not really doubting that. And that's why I threw out the $100 million. You got 2 buildings, it got to be worth 50 a pop, right? It's downtown Denver. It can't be that much less. So you do that math and you're literally, 96.8% discount from valuation if you're thinking 100 million 6 years ago. And that's half of what they're talking about 200 here. So I know that was a bunch of number talk, but it just kind of goes to show the how much the market has dropped. None of this 40, 50% stuff, right? We're just going to go in large. We're going to go in hard with 96.8, some ridiculous number like that. That's nutty. Is that right? 3.2? Yeah, I think it is. Don't follow me because of my math, all right? That's it for me on this one. Thanks so much for being here. I'll catch up with you in the next one. Love to have you subscribe, do all that good stuff. I'll see you in the next one. Bye for now.